everyone. Good evening. Okay. Yes. Hi, good evening, everyone. Welcome back to one of our webinar. So today our topic is all about risk management strategies for FX CFD trading. Okay. So I hope all of you have your dinner. Right. Thank you. Good evening. Yes, I need this. Okay. Yes. Now. Okay. Now, before we start, here is some disclaimer. All the content here are actually for educational purposes only, and if you need some advice, please consult your TR or remiser. Okay? Now, here's the agenda for today. So let's start with the basics of FX CFD, and then we'll move on to what is risk management and also its risk management strategies, where we have position sizing, stop loss orders, diversification, and also risk-reward ratios. Okay, now let's start with the basics. Okay, so here we have Australian Japan yen. So on the left side is always the base currency, where on the right side is always the term currency. So here the base currency would be Australian dollar and the term currency would be the Japanese yen. Okay, so FX normally quote in pairs. As you can see here, Australian dollar Japanese yen equals to 95, which means that you need 95 Japanese yen to exchange for 1 Australian dollar. Okay, and all the trades on a profit and loss would be actually reflected in a term currency, which in this case would be the Japanese yen. Okay, now here on our PoIo's platform, actually FX CFD is actually a tradable instrument where it actually mirrors the underlying assets movement, which is in this case the FX spot market. Okay, so here on the PoIo's platform, as you can see here, here is the Australian dollar Japanese yen FX CFD. So here we can actually see the spread is provided 1.8, and here on our platform we actually provide mini lot of 10,000 instead of the normal lot of 100,000. Okay, so here actually lets you see that how much Sing dollar would you need to actually open a Australian dollar Japanese yen contract, where in this case it is around $438 to open 1 Australian Japanese yen FX CFD. Okay, now so we have actually our new platform, which is MT5. So here is the MT5 order ticket, where this is the Euro Japanese yen ticker. And then here you can actually choose your order type, whether it's pending order or exchange execution. So exchange execution here means the market order. And here actually shows you all of our FX CFD contracts are all based on mini lot, which is the quantity of 10,000. Okay, and then here on our MT5 platform, you can actually set your stop loss and take profit at the same time. And then here is some remarks for you to write whatever you want in this comment section. Okay, so here actually shows the bid-ask spread and let you see how much are you buying or selling up, basically. Okay, now let's move on. So in FX CFD, we have this thing called a rollover swap, which is also known as the swap points adjustment. So this is actually when you hold our FX CFD position overnight, then there will be rollover of the spot FX underlying. Okay, and then swap points will be gained or lost. So this is because of the result of the interest rate differential between the currencies bought and currency sold. So what do I mean by that? Let's say, for example, assuming that now the US interest rate is actually higher than the Euro. Okay, so by opening a short position for Euro USD, which means that you are actually selling Euro and buying USD. So when you sell Euro, you will need to pay interest. When you buy the USD, it means that you receive interest. So when your interest received is more than the interest paid, you will get a positive swap points. So if your interest paid is more than interest received, then of course your swap points will be negative. Okay. So here, why should you actually trade FX CFD with us is, first thing and foremost, is the ability to trade 24/5, which is 24 hours a day and 5 days a week. So let's say, for example, if you're a full-time employee working as a lawyer, a doctor, or 9-to-5 job, you can't really trade the Singapore stock market because during working hours, right? Because you're actually working. But for FX CFD, you can actually trade during weekdays or even after your work. So other than that, we have around 39 FX pairs for you to trade as low as 5% margin. So what do I mean by 5% margin is with the total contract value, you would only need to put 5% of the contract value up to open a FX CFD contract. So there's around 20 times of leverage that you can use. Okay, and for us, FX CFD, we only provide 10K contract, which is the mini lot and not the standard one. Okay, so this also help to provide more leverage to our traders. So here, we urge you to actually trade FX CFD with us because we don't charge commission, we don't have finance charge, we have no FX price fees, and also we have quite a competitive spread, as you can actually check online. And then we have also various platforms for you to trade, Poems, Mobile P3, MT5, and Mobile MT5. Okay, now let's move on to our risk management. Okay, so the goal here for risk management is to make consistent profit and to minimize your losses, right? Okay, now so here actually what is risk management? Risk can be in a lot of ways. So let's say, for example, you have operational risk, you have FX risk, investment, credit risk. So today here, we are actually focusing more on investment risk, which is also known as the trading risk. Okay, so risk management is all about identifying your risk, to quantify it, to manage your risk, and then to actually mitigate the risk. Okay. Now, so a lot of people ask, why do I even need to manage my risk if I can just make a lot of profit and everything? But I feel like risk management is really important, especially when you want to stay in the game for the long term. So especially for your capital preservation. So when you actually employ risk management strategies, you won't lose a significant amount of your money in a single trade or a series of losing trades, right? So these actually allow you to continue trading in the market and take advantage of opportunities. So risk management also help you to minimize your losses, where it's actually normal for people to make losses here and there. So this help you to limit your losses, and you can actually do that through stop loss order, position sizing, and setting a max drawdown kind of thing. Okay, so next would be having a long-term viability. So which means that risk management actually help you to stay in the game in the long run and increase your chances of making consistent profits. Okay, and the last thing is most important is where, because trading is actually not a get rich quick scheme, right? It is actually require a really long-term kind of endeavor for you to actually make consistent profit, because consistency is the key here. Okay, now there's this thing called slippage in FX trading, where actually slippage is part of the risk that you have to accept in FX trading. So it actually occurs when there's a delay between an order being processed and when it is completed. So what do I mean by that? As you can see here, right, when you place a sell order at this low, so when you submit the order, and then suddenly the price get down in a millisecond, let's say 0.01 or 0.001, you wouldn't know. So at this millisecond, suddenly your order have to be filled at the next available price, which is below here. So in the end, when you open your short order, it would be over here. So this is called, what is what we call a slippage, okay, which is the difference between what you intended to sell at, but then actually it is actually much lower. Okay, so this actually occur when you trade exotic pairs where it has less liquidity. But then in major pairs, like during market data release or breaking news, slippage actually tends to happen during this high volatility time. Okay, so slippage do occur. But I think one way to mitigate it, you can actually try to use the guaranteed stop loss. Where, okay, now this is the different risk management strategies that we are going to look at today. So position sizing is how do you determine your position size through your risk parameters, and then how do you utilize stop loss order to cut loss or lock in profits. Okay, and then diversification, also quite important, is to basically don't put all your eggs in one basket. And then lastly, we'll look at the risk-reward ratio to actually evaluate whether the particular trade is worth taking the risk or not. Okay, now let's dive deep into position sizing. Okay, so these are the different methods to determine your position size in terms of how much that you want, how many lots you want to buy for a particular FXCMD. Okay, so the first thing would be the percentage of capital. So how much you're willing to risk based on a percentage of your total capital. Okay, and then next we have the fixed lot size is depending on your risk appetite, whether you want to, let's say I just want to test water in a particular currency pair. So maybe I just want to put like one lot for that currency pair. Okay, and then this is, the last one would be the volatility-based sizing. So this is basically how traders use their historical volatility of FX pair to determine how many lots for them to trade. So normally they will use the average true range, and this is actually a more advanced style that the traders use, but we're not going to go in depth it today because I'm trying to make this more beginner friendly, okay, for everyone. Now, here. So this the percentage of capital. So this is what we use percentage of capital position sizing to actually determine your position size. So let's say, for example, today I'm only willing to risk a certain percentage of my trade. So this is the formula that you need. So once you actually see, okay, this particular trade, how much is your trade capital? So your total trade capital, how much of risk that you are willing to risk in terms of percentage, and then you need to determine the contract value in terms of the term currency. So how do we find it is through using the 5% margin, because all of our FX CFD is 5% margin. And then that's how you find your position size through this. So let's look at an example, okay? Now, so here, let's say, for example, you want to buy a USD Japan yen, but you're only willing to risk 2,000 of your total capital for this trade. So how many lot of USD Japan yen can you buy? So let's say, for example, here, the USD Japan yen, the price now is 140. And then the total capital that you have is 100,000. And then let's say you are only willing to risk 2% of your capital. Then now you would actually have the 2,000 Sing dollar here. And then you need to convert to Japanese yen. So once you convert to Japanese yen, you need to know your contract value, which is a total of 4 million Japanese yen. So in this case, you can only buy 3 lots in order for you to only risk 2,000. So this is how you use the percentage of capital to determine how many lots you're buying. Okay, so now this position sizing fixed lot size, this is actually very simple. It actually depends on how many lots of a currency pair that you would like to trade. So in this case, the Canadian Japanese yen FXCMD, right? So let's say, for example, you want to test the water and you are willing to risk 2,000 Sing dollar, but you're not sure how, then you can just go onto our Coins platform, open this order ticket, and then you just put the quantity. And then here, they'll automatically help you to calculate and around how much that you're actually risking for this trade. So this is actually how you see in terms of lot size. Okay, so let's look into the stop loss order. Okay, so we have different types of stop loss orders here. The most common is what we call a market stop loss. So this order will be actually executed at the market price when the stop price is triggered. So, oh no, okay, not the stop price is triggered, sorry. So this market stop loss will be executed at the market price. I think I made a mistake here. It's not, there's no triggering of stop price over here. So the triggering of stop price only happen during a stop limit order, okay? So the order will become a limit order when the stop price triggered. Yeah, so this is the stop price, stop limit order. So this would only execute at market price, okay? So I made a mistake here, okay? Yeah. So the next one will be the OCO order. So what does OCO order means? That is one cancel the other. So automatically, when, let's say, for example, you set a take profit and a stop loss, when the take profit is executed, your stop loss will automatically be expired. So this is what it means by OCO. Okay, and the next one would be time stop loss. So you set your stop loss based on a predetermined time duration. So we have good till date, which is what we use to actually set stop loss. Let's say, for example, I want it to be I want the stop loss to actually be valid for a certain period of time, which I'll show more later. Okay, and then here is the first thing, which is a market stop loss, which is what we have in our MT5. This is a Australian dollar Japan yen currency. So the market stop loss actually guarantee the execution but not price. So in this case, you have to put as pending order, and then after that we need to put the type, which is this case is a buy limit. So when we enter a position at a certain price, for MT5 we can actually set the stop loss and take profit at the same time. So that is when you submit at this price, you buy at this price, 95, then they will be actually submitting a stop loss of 94.9. So 94.9 will be submitted at a market price. Yeah. So this is our MT5 platform. For poems, we do not have this, but it is actually much more convenient for traders to actually use MT5. Okay. So how do we set our stop limit order? So this platform is our poems platform. In this case, we need to set the order type to stop limit order. So stop limit order is different than the market order, where this actually guarantee the price but not the execution. So just now the market price actually, the market order actually guarantees the execution, but we can't guarantee the price because there are also a possibility of slippage, as what I've mentioned just now. Okay, so here after that you need to set your stop price. So let's say we set at 1.069, where, for example, if the market price hit the stop price at 1.069, the system will submit a sell limit order at 1.068. So basically the stop price acts as a price trigger for you to actually submit the limit price at this price. Okay, so you can actually test out the system once you can actually test it out, in our previous platform. Okay. So why we can't actually guarantee the execution for the sell stop order? So as I said just now, when we submit this order at the limit price, because this is the triggering price, right? The stop price is triggering price. So when we submit the limit price over here, so initial position is over here. So when the sell stop price is triggered, we will submit a sell limit price over here. So there's a possibility of the market falling in between the sell stop price and the sell limit price, and it will be brown. So which means that when it rebound, the market price did not reach this level, correct? So it will not be done. So once there's a possibility of the market price that actually rebound and then will not done this limit price that we submitted initially. So which means that we can't guarantee the execution, but only guarantee the price. Okay, so here, how do we set our OCO order in poems? Which is here, the first thing on our poems platform, you need to set the OCO order. So once you set the OCO order, it means that it is actually the one cancel the other. So let's say initial position, you have a short Euro Japanese yen. This is a Euro Japanese yen counter. And then we can actually set to take profit and stop loss at the same time. So initial position we already enter as a short position. And then this is how we set. We set the take profit buy at 156.6 for the short position. This is our take profit. And then we will actually set the trigger price for our stop loss of 157.7 because our initial position is short, correct? So our stop price must be above the market price and above the our initial position. And then this stop loss price, we can actually set higher than the stop price that we have, because when the market price increase, this is the triggering price, and then we will submit stop loss at this limit price. So this is how we set our OCO order in our OIO platform. Okay, now it is actually similar to our first slide, where how I showed you how do we set the take profit and stop loss order in the market price stop loss. Market price stop loss, yes, order. So this is our Australian Japan Yen FX CFD. This is how you set, which is using the pending order and then the buy limit. So when you want to enter a position and you buy at 95 for the Australian Japanese yen pair, so you set the stop loss at 94.9 and take profit at 95.2. So this is actually very convenient for those who actually wants to follow a trading plan that they have set, and then they can actually set your, you can actually set your stop loss and take profit. Yeah. So here GTC, which means that it's good to cancel. So both of this order will remain valid until either one is filled or you cancel manually. Now, let's move on to diversification. So it's basically do not put your eggs in one basket. Okay, so what is diversification? So it's actually to lower the impact when there's a negative swing in the price movement of a certain currency pair. So the first thing, most important, is to actually for risk distribution. So when you trade different currency pairs, it actually allows you to distribute your risk across various markets. And then later on, you actually see what are the different currency pairs you can actually put your eggs over, the major or minor or exotic pairs. So let's say, for example, major, you can put Euro USD, and then minor, you can put Euro Japan Yen, or exotic is like Canadian Japan Yen. And then you actually need to actually go and search up or actually calculate the, or I mean, you don't have to calculate yourself, but there are actually sorry. Okay, so for the correlation analysis, so you actually can search up online for the correlation analysis that's given, and then you can actually see how the different pairs are actually correlated. Because with lower correlation means that when you lose in one currency pair, the gaining currency can actually help you to cover the losses in another currency. Okay, so this is why you need the currency pairs to actually move in opposite direction. And then last and most important thing is to monitor and rebalance your portfolio, because there are actually changes in the market, and then some pairs that move in tandem in the future, the correlation will go up as well as your risk. So depending on the market condition in certain ways. Okay, so let's say, for example, if you want to trade two major and one minor pair, which is the Euro USD and Euro Japan Yen, and then the last one is USD Japan Yen. And the next thing is to determine the correlation between these currency pairs, which I'll show you later. And then for the risk distribution is determining how many percentage to put in each currency pair. And then later on, you monitor and rebalance. Okay, now, so we are saying that we are gonna invest in these three currency pairs, correct? So here are the correlation analysis, and let's say, for example, what does this correlation analysis means? Where when it's closer to -1, which means that it's more negative correlated. Where it's more to +1, which means that it is actually more correlated. So as Euro USD goes up, USD Japan Yen will go down, because in this case, it is a negative correlation. While as comparing to USD, Euro USD to Australian USD, it is actually a positive correlation. So which means that when Euro USD go up, this will actually go up too. Okay. So based on this correlation, it depending on which time frame that you would choose to invest, because as you can see that in the 1 month time frame, actually both of these are actually positive correlated to this Euro USD. Okay, so let's say for example, for me, I would actually maybe thinking of investing in 1 week, 3 months, 6 months, or 1 year, because it actually move in opposite direction, where actually the Euro USD pair losing can be compensated by the gains in USD Japan yen, and then the gains in Euro USD can be amplified by the gains in Australian dollar and USD also. That's why I choose both to be moving in opposite direction, while one pair can be moved in the same direction. Now, so here, let's say for example, the FX portfolio risk management in terms of rebalancing wise. So let's say for example, the Japanese economy is bad as relative to Euro. So the Euro Japanese yen will actually rise, while this will fall because they are having a negative correlation, correct? So based on this, you can actually rebalance your portfolio in terms of increasing your exposure in Euro Japanese yen, and then you reduce your exposure in the other two pairs. So this is one of the way that you can look at it and how to use the correlation analysis. Now, let's move on to the last one, which is the risk reward ratio. So this is depending on how much you are willing to risk to take for a reward. So let's say, look at this. So risk reward ratio represents the potential gain compared to a potential loss that the trader is willing to tolerate. So let's say, for example, 1:1 risk reward is for every unit of risk, you expect the same amount of reward. But 2:1, you will expect a double of the reward for every unit of risk. So the last one would be, you expect the triple of the reward for every risk that you take in a trade. Now, so let's say, for example, for every unit of risk, I want a double reward. So let's say when we long Euro USD at 1.12, the risk reward ratio is 2:1. So 100 pips over 50 pips. So the risk, you can just calculate like that, and then you'll get 1.115, and then your reward according to this. So this is how you use to set your stop loss and take profit at a certain level. So 100 pips for take profit and 50 pips for stop loss. Now, so in order for you to trade with us, which is our POEMS or MT5, you will need a POEMS CFD account in order for you to access to our MT5 account. So MT5 account is actually a more self-serve platform for our traders, which most of you can actually open a demo account first later on, which I'll teach you how. So for those who want to open the POEMS CFD account, can actually visit our poems.com.sg, our website, or you can actually scan this QR code. Then after you scan this QR code, you will need to select all the relevant facilities that you need, trading platforms, and then most importantly, you need to select CFD. And then you can continue in registering using your details. Now, so after you have POEMS CFD account, you actually can opt into MT5 with the existing POEMS CFD account you have. So what you need to do is to go to your account management, and then you will go CFD, and then you will need to select MT5, and then that is how you're going to add your CFD MT5 account. So later on, after that, you opt into MT5 account, they'll ask you to download the MT5. So there's a two-way for you to actually install MT5. One is using POEMS MT5 link. Another one is the general MT5 desktop app that you can find online. So this is downloading using our POEMS CFD MT5 link. So first thing, you have to make sure that it is actually our POEMS CFD server. Then you can only access to our platform, because you need the server in order to be connected. So this is when you use our link to download, the server is already automatically linked. But if you use this MT5 online, which is you can find online, you will need to actually key in this series of code to be connected to our server so that you can actually trade our FX CFDs. So now the most important thing is for you to actually set up your OTP. So once you sign up your MT5 account, you'll receive the email and there will be instructions on installing MT5, where there's actually system generated password for you, and then you need to key in the account number and the system generated password. Then it will actually prompt you to set up the OTP. So when they submit, they actually prompt you to set up the OTP is where you can actually either use Google Authenticator or use your MT5 mobile. So when you use your MT5 mobile app, you will actually need to retrieve your OTP from Google Authentication when you actually trade, whether using your laptop or your mobile. But for those who actually likes to trade on the go, you can actually straight away link your OTP using the MT5 mobile, so that it saves your hassle in terms of switching to the Google Authenticator to retrieve your OTP. So after you set up your OTP successfully, and then you will log in the system with the generated password, and then they'll prompt to set a new password when you log in. Okay, so this is how you set up your MT5. And then for those who are interested who don't have a MT5 account and would like to try out, you can actually scan this QR code, and then you can actually be more familiar with the platform and actually replay this video if you want to learn how to actually set all the stop loss or market order that you want. And then before you officially fund in or start trading with our live account. Yeah. So I'll leave here for 1 minute for you to scan. So it's actually important to know that you need a POEM CFD account in order for you to access our MT5 account. Yeah. So you have to sign up for a POEM's account first. Okay. Let me have a look. Okay. And then next is, so now we are actually having a promo. Is due to overwhelming responses, we have actually decided to extend this FX promo. So you can actually trade FX promo on both platforms, POEMs and MT5, to be eligible to get this 360 cash credit. So this is actually cash credit where you can actually where you can actually take out from your trading account as cash. So you can actually scan the QR code to learn more about it. Okay, yeah. And then this is the FX promo that we have. So when you execute 8 FX CFD trades, you actually get 20 CFD cash credit. So remember, this cash credit you can really actually withdraw to as cash. And then if you execute 28 more FX CFD trades, you can get 100 CFD cash credit. So total in 1 month, you can actually get 120 CFD cash credits. Okay. So from now till December, in total, you can get 360. Yeah. Okay. Now, so this is our own ongoing program that we have for those who actually trade MT5. So these are more tailored towards traders who actually trade a lot. So depending on your tiers, so there are different tiers where you will receive trading credits depending on your trading volume in a month. So let's say, for example, the trader actually trade a notional value of 20 million of FX trading volume in a month, and then they'll get 50 cents for every 100,000. Okay, so you can actually refer to our website. We have actually more info on this also. So on MT5, the Trade for Reward program, we have for other asset classes also, but today we'll focus on FX. Okay. Now, so let's proceed with Q&A, which actually I can see quite a lot popping up. Hold on, yeah. Let me have a look. Okay. Let me see. Okay, so I saw there's one from Daniel. Any chance you all will have sharing session on how to optimize the usage of those platforms you have? Or do you guys have plans to onboard other or more platforms? Okay, so technically for us, we have mainly two platforms. One is Poems and another one is MT5. So technically we have actually ongoing session of these two platforms to actually teach you how do you use to trade CFD. So you actually can stay tuned and pay attention to our website, and then you can sign up for those sessions in the future. Yes, so we definitely have those sessions. Do you have advanced orders like if done, then stop loss or take profit order all in one from Moon Chu? You have advanced orders like if done, then stop loss or take profit order in one. Okay, what do you mean by if done? So let's say, for example, on MT5, once you submit a market price, you can either submit a market price or a limit order. So at the same time, you can actually set the stop loss or take profit. So that is more tailored towards your need, I would say, Muncho, and then you can actually try it on our MT5 platform. So yes, that advanced order is available on our MT5 platform. Okay, so another one from John O. What happens to the OCO order if the trigger price is reached, but the stop price is not? Will the OCO order remain valid, or is it has to be reset? Okay, so you're talking about OCO order, right? So OCO order normally actually being used when you have an existing order. So let me go back to that slide. Okay, OCO order. Right, okay. So this OCO order, right? If the trigger price is reached, okay, no. So this is actually mainly used for when you have an initial position. So if you do not have any initial position, you can also use this as a strategy where actually trader use to enter a position. But normally this is used for a take profit and stop loss. So let's say the trigger price is reached, but not the stop price. So technically the stop price is the trigger price, as you can see here. So this stop price is the trigger price for you to submit your limit price. So let's say if this stop price is not triggered, your order will still remain valid, but only valid for the day. It is not valid like what we have a good to cancel or good till date. So that is another type of orders, but for now, OCO orders are actually validity day, which is valid for the day. Then after the day already expired, then you will have to reset it. Yes. So next, from Victor Lim, MT5 need to take test or exam? No. Actually, MT5 you do not need to. Okay, so but then for those who are new to FX CFD or new to CFD, you would actually need to pass your CKA or CAR in order for you to actually trade CFD in a way. Yes. So there are actually quite a lot of videos on our platform that you can actually view, and then you can proceed in open an account and or a MT5 demo account if you want to actually test it out. Okay, from Dave Chi, where can I get the correlation analysis info? Okay, normally this I would say you can actually either search on Google, or you can actually do your own correlation calculation on your own by getting the data with the price data and all, and then you put it into Excel and then you do the math for it. Yeah, I mean that's the most accurate, I would say, but those who are published online, either it would be a past info or it would not be as accurate, because the most important thing is your own trading plan, correct? So I think it's the better way is for you to actually do your own math to get the correlation analysis. Yeah. Then next on PhillipCapital. Okay, the system do currency pairings and correlation analysis. You mean for our poems and our MT5? Is that what you mean? So, okay, in terms of currency pairings and correlation, okay, we on our system, we do not have this correlation analysis, but we have this so-called FX CFD heat map on our platform, where they actually show you normally what are the currency pairs are providing either swap positive or negative swap points. Yeah, so that's the only thing. But we're actually looking at providing the actual numbers of the swap points instead of showing that it's positive or negative only. Yeah, because in terms of showing positive or negative can actually show you what are the trends, right, for different currency pairs. So for now, no, we do not have this currency pairing or correlation analysis. So from EG, if the currency pair I want to trade has negative swap points, this means that my risk or reward has to include negative swap points in my calculation of risk. Okay, so what I would say is negative or positive swap points is technically your P&L. Not to say P&L, but is more towards of what you think about, because to have these positive or negative swap points, it depending on your circulation for a particular currency, whether which interest rate is going to be higher than the other. So in terms of including a negative swap points that you would encounter, and I think that would be a good idea to include it, but I would say it's not a 100% thing that it would be a negative swap point, because it might go into your favor. So if you include these negative swap points in your calculation of risk, it's actually helping you to give you a better buffer in terms of the risk appetite that you're willing to take. Yeah. Okay, then let me check the Q&A. Okay, do you have any calculator for calculating the buy volume based on oil risk level? Okay, so that one currently we do not have, but on our Poems platform, right, you can actually use this where it has automatically it's calculated for you in terms of how much that you are willing to put up depending on the quantity that you want. So rather than working backwards, you can just adjust the quantity as you want, because minimum is one lot, right? So let's say put one, you minimum how much you in terms of Sing dollar you need to put up. So that is the current calculator that we have, but we do not have other risk level where I've showed you just now, where volatility based does I mean, we don't have that a lot, but that's of a more advanced calculation. Yeah, so for now it's just this that you can play around with. Okay, all right, this is already answered. And then, do we have the same number of stock CFDs in MT5 and Poems too? Okay, currently currently our Poems too will have more CFD counters as compared to our MT5, as we are looking at adding to more stocks into our MT5 platform. So if you're interested to trade any other counters, you can actually tell your TR, or you can actually call in to actually suggest that you would like to trade this particular counter. So you want it to be added into the MT5 platform. Yeah. So it's actually viable. Yeah. Okay. Then for mutual, when you're using MT5, is the server CFD and Nova different or the same? Okay. So the server is different because Phillip Securities and Phillip Nova are treated as a separate entity. So meaning that the products that we have and the server that we have are also separate because of MAS law and everything, but all the while we are actually under a parent, under the same parent company, but it's just that we have to be treated differently. Yeah. So technically we are just different entities. So we have to have a different server. So how different are MT4 and MT5? So from what I know is MT4 last time actually they provide solely for FX traders, which is a very successful platform that entice a lot of traders. So how MT5 come about is where the MetaQuotes company wanted to actually provide the platform for traders to access for various asset classes. So for MT5 is you do not only have FX, but you have other classes also where you can actually trade futures, you can trade stocks and any other asset classes that you can think about. Yeah. So on our end is FX CFD. Yeah. And also we on our MT5 platform we have stock CFDs also for Singapore and US. Yeah. Okay. Let me have a look. Okay. Yeah. So is there any other questions? Can you trade smaller than one lot? At this point of time, no, because what we offer is consider a mini lot, which is 10K is considered quite sufficient, and we only have 10,000. Yeah, which is the one lot. We can't trade smaller than one lot. It's fixed. Yeah, let's see. So do we have any other questions? Can stay online for one more. Yes, okay. When you ask, can I transfer funds between different platforms? Okay, so in order for you to access your MT5, you need to have the POEMS CFD account. And yes, you can actually transfer funds between platforms. But in order for you to transfer funds into MT5, you have to top up your POEMS CFD account first before you can transfer to your MT5. And we are actually looking at ways to actually let you top up your MT5 account directly from your bank account now. But for now, you have to go through the POEMS CFD account, even for deposit or withdrawals. Yes. Yep. Thank you, Joseph. No problem. Bye. Yeah, are there any other questions? Okay, so thank you so much for today, and I hope to see you guys on our next session. See you, everyone. Some withdrawal normally 1 day. 1 to 2 days, I would say. Thanks, thank you. Okay. It will be posted on our website. Thanks everyone. Bye.